Hi guys, my name's Tim, welcome to the channel, and today we're looking at Bitcoin and we're trying to see whether $64,000 right here at the very top of the cycle in 2021, whether $64,000 was the top and whether there's any hidden clues in the data to show us whether that is the case or whether we're likely to turn around and start going up to other all-time highs in the future. Now, a lot of people have said we didn't get a blow off top in 2021. And every other peak that we've had in every other year has had a blow off top where the price has gone skyrocketed and then it's crashed down like that. Okay. Whereas this time we've had this kind of like sort of rolling sort of top that just didn't give us the same satisfaction as we've had in the past of a big blow off top. So I want to compare 2021 to 2017, which did have the blow off top that people talked about. We'll also look back at 2013 and we'll look at some of the other blow off tops that have happened with the NASDAQ and the Dow Jones also. And we'll just see if we can see anything that's consistent in the data and see if there's any clues that it can give us. Okay. So the first thing I'd like to do though is add in the 50-day moving average. Now, for me, this is a really critical bit of information, and it tells us something really, really interesting. Now, you may have noticed it already, but I'll just explain what's going on here. So the 50-day moving average appears to be a bit of a support band for Bitcoin. You can see here that it tends to bounce off it when it's going up, and the moving average is moving up with it. And then at some point, we end up crashing through the 50-day moving average. Then we make a lower high, and then we end up crashing. Now, to me, there is a difference between a crash and a correction. And I see these points as being corrections, okay? And then I see this point here as being a crash. So for me, the definition is when you bounce off the moving average, the price does come down, but you bounce off it. To me, that's a correction. And when you crash through the moving average and then struggle to get above it again, that's a crash. It's almost like a surfer. You know, you're surfing the wave here, and then at this point you fall through it, and you're drowning, and then hopefully you come up for air, you take a breath, and then get back underwater again, and then you come up, take a breath, and then get back underwater again. So that's the way I see how the price interacts with the moving average and the difference between a correction and a crash. Okay, now the obvious thing here that's staring us in the face is that this moving average looks like a nice symmetrical rounded top. Okay, so which is no surprise because that's what the price has done. It's kind of a rounded top. So we'd imagine if we look at 2017, we'd imagine that it will look something like, some sort of blow off top, wouldn't it? So let's have a look at 2017. And hang on, look at the moving average. It's a rounded top as well. Isn't that interesting? So the difference with 2017, the price action, you can see here, it does bounce off the 50-day moving average. But then at this point, we end up overextending by 115% at this point here. Then it comes down a little bit, and then we overextend by about 95%. So we're 95% above the moving average. Now, you have to wonder at the time, was there a way to predict that it was going to start crashing down like that? And what I'll do is I'll just cover up the screen. And you can see here, you can actually see what the moving average is. And at this point, you can see we're overextended a little bit. And then at this point, you can see that right there, we have this big parabolic run up. Now that is a real sign that we are likely to have a correction. And what happened is it kept going up a little bit more. And then at that point, that's when we had the correction. So really, anyone looking at this chart here at this point should have really been on edge, knowing that that's how far away we are from the moving average. Okay, it's a very scary place to be. So this is an ideal point to take some sort of profit. It's easy in hindsight, but when you're overextended that much, that is scary times. Okay, so despite this big runoff, this run up top, you notice the moving average is still a very symmetrical, rounded top, very similar to 2021. If I bring them up side by side, I just took a screenshot before just to make this easier. If you bring them up side by side, they look eerily similar, don't they? So if you ignore the price action and just look at the moving average, the price looks very, very similar. And you can see we did a very similar thing. We crashed through the moving average. So just like the surfer, we're basically surfing and we're bouncing off the wave. We crash through it. And then right down here, we bottom out. And then we come up for air. Take a breath. And then we're back underwater again. And so if we look at 2021, what happened? We crashed through it. We came up. We took a breath. And we're back underwater again. Okay. So really the next logical thing that we do is probably we come up for air. But you notice what's a little bit different is we've just been going sideways. There isn't the momentum that we had back here. Because back here we bottomed and then we bounced and had that momentum that shot us out again. Okay. Whereas this time around we've kind of just gone sideways. And we haven't even quite got to that point of touching the moving average yet. So that's interesting. So it suggests that we can the options are, we either come together with the moving average and then a move is made and it goes up, or a move is made and it goes down, or we stay below the moving average and we actually end up having another bottom. I'm not suggesting we go down this low, but this is just to demonstrate the point. And then at that point, we get the momentum to shoot us above the moving average. And based on past history, whenever we start crashing through the moving average and come up for air, and then we go underwater again and come back up again, we tend to do that back and forth until the moving average and the price equalize. Okay, now I'll show what I mean by that. Let's go back to 2017. So you can see here, we come up for air above the moving average, we go underwater again. We come up for air above the moving average, we go underwater again. So it's just kind of like go above, below, until a point when it kind of peters out, very similar to a wave in the ocean. We have this big wave, and then at this point we can actually breathe again and take a breath. So think of it as like a big wave in Hawaii that a surfer has been dumped on, and then finally the wave sort of dissipates and you can finally take a breath. So that's very interesting. So we equalized with the 50-day MA. And then interestingly, we then collapsed into the 1400-day MA, and then the complete bottom, we kind of equalized as a whole at the very bottom, and then we were able to regroup and then bounce our way out of that bottom. So it's quite interesting how that happens. So the speculation here is, what happens for the rest of this run? So there's some people that think we'll just turn around and make a big recovery, and that might happen. We can't rule anything out. But what we've seen in history, though, is we've tended to go down. We take a breath, and if we just extend this out, let's just say that it does that, we might go down, take a breath, take it down until it eventually, at some point, and this is not to scale, but at some point everything will dissipate and everything will equalize. Okay, so that's a little bit of speculation, so I don't want to go too far ahead there. But let's have a look to see what other markets have done and how they react in this similar situation. So you can see here we've got the NASDAQ, and this is the dot-com bubble. And I'm going to release a video in more detail about this soon, but we've got different moving averages here. These are monthly, 30-month, and this red line is a 300-month. So it's totally different timeframes. But the same principles exist. We overextended the moving average by about 95%, and then we do the lower high, and then we crash through it. And then once you crash through it, you come up for air, then you crash through it again. And then at that point, we're able to get on with things. If we look at the Dow Jones, this is the 1929 crash, similar thing. We did the lower high and we crashed through it. We crashed through it badly. We come up for air, we crash through it again. We come up for air, we crash through it again, and then we're off and away. So there's a bit of a pattern here. Now, a lot of people like to compare 2021 to 2013 because 2013 was a double peak, and there is a theory that perhaps 2021 is a double peak also. So let's have a look at 2013, and it's interesting because most people look at this in a logarithmic format, which makes the first peak look bigger than it is. But when you look at it in just a regular format, the first peak is actually quite tiny compared to the second peak. Now, you have to remember also that we're dealing with much smaller amounts of money. So this massive peak here, it topped out at about $1,100 or so. And this mini peak down here topped out at about $225. So we're only talking about small amounts. I mean, Bitcoin was like $10 down here. So what's interesting though, we had the runoff, we had the big blow off top, but look at the moving average. Look how lumbering and slow it is. It's just a big sort of hill. It's almost non-existent. You could almost argue, and we're dealing with such small amounts of money at this point, such a small market cap. You could almost argue that was a non-event. It was just a bit of a build-up. And we had several build-ups, like we had 2019 that happened before 2021. So perhaps this is just a mini build-up. The moving average isn't that interesting. It's just very flat. And then we had the big run-up, and again, we had the big 193% overextended at this point. Just, I mean, imagine this. Imagine this at the time. If you just look at it, look how high it is. Look how high it is extended above the moving average. This should have been a real warning sign that we're going to correct or crash. And what happened was we basically crashed down. We had the lower high, and then we crashed and went underwater again. And let's see if it follows the same kind of format. We go underwater, we come above it, we go underwater, we come above it, we go underwater, we go above it, until it peters out and it dissipates. And then we're able to start bouncing our way up again. So that seems to be the trend. And I mean, look how big this is. This is 2017 in comparison. It's like Mount Everest. And then 2021 makes this look like a tiny little hill as well. So anyway, I'm going to stop the video there. Some of these topics I'm going to go into a bit more detail later on. I'll talk more about the dot-com crash and what we can learn from that, and whether this is likely to happen again in the future. So I'll talk about that in more detail. I might also look at the Great Depression crash and just see what if something like this ever happened again, what it would look like, and whether it's likely or not. So anyway, I hope you enjoyed the content. I know it's a little bit long-winded, but there's so much to go through here, and it is quite fascinating. I think we can learn so much from history, and so much from these charts, and so much from the patterns. And it's great to get away from the 4-hour charts and the 1-hour charts and so forth, and just look at these patterns, and it can help us predict the future. So without any further ado, I'll finish it up there. Don't forget to subscribe. Hope you enjoyed the content. Again, not financial advice. This is purely entertainment value only. But I'm hoping that we can all learn together and try a few different approaches to analyzing the charts. So until next time, I'll see you then. My name's Tim. Cheers.